What if your portfolio paid you every single month, like a paycheck, without you lifting a finger? Today, I'm breaking down one of the most reliable dividend stocks in the entire market. It quietly builds wealth month after month. Let's get into it. If you want consistent cash flow, there's one name you need to know: Realty Income. It's a real estate investment trust, a REIT, that has been paying dividends every single month since 1969. They own thousands of commercial properties, making them an essential partner to their tenants. Realty Income collects rent from dollar stores, fast food chains, supermarkets, and warehouses. These businesses must have physical locations to operate, providing a built-in defense against e-commerce disruption. Realty Income's properties are the foundation of their tenants' businesses. Realty Income is more than just a landlord. They facilitate sale-leasebacks, injecting cash into companies that lease back the property. They enable expansion by acquiring prime real estate for growing tenants, and they consolidate property portfolios during mergers. Here's the headline number: a 5.5% dividend yield paid monthly. Monthly dividends compound faster, give you predictable cash flow to budget around, and keep your money working harder with zero idle time. This is why they call themselves the monthly dividend company. Where does the growth come from? First, rising rents. Leases include built-in escalators, so cash flow grows even without new acquisitions. Second, acquisitions. They have barely touched the trillion-dollar global market and are expanding into Europe, giving them a scale advantage. Let's do the math. A 5.5% dividend yield, plus 1.5% from annual dividend growth, plus a modest 1% from property appreciation, equals a projected 7 to 8% total annual returns. Compounded over time, slow, steady, and reliable wins the race.
Starting with a $10,000 investment and reinvesting dividends, you could reach over $100,000 in 30 years. That's the power of compound monthly dividends, building life-changing wealth quietly in the background.
Now let's talk risk. Interest rates. As a heavy borrower, rate hikes can increase their cost of capital, potentially squeezing the dividend. However, most of their debt is long-term and fixed rate, insulating them from short-term spikes. Historically, they have survived every cycle since 1969. Risk number 2, tenant risk. If a tenant closes, the property goes vacant. This requires time and money to replace, stressing cash flow. Their defense is diversification. Over 15,000 properties across 90 industries, with no single tenant representing more than 5% of revenue. Realty Income is built to last. They navigated the 70s oil crisis, the S&L crisis, the dot-com bust, the 2008 financial crisis, COVID, and the 2022 rate hike cycle. Through every crisis, the dividend was kept or raised. That's a business model built on essentials. Realty Income is perfect for long-term investors, retirees seeking passive income, and those compounding dividends. It's not for traders or those expecting 20% annual returns. The patient investor wins the long game. The final verdict? Realty Income won't make you rich overnight, but it will put cash in your account every month for decades. A 5.5% yield, 7 to 8% total returns, and a track record through every crisis since 1969. As always, this is not financial advice. Do your own research. If you found this valuable, like and subscribe.